Our first panel of the day is on social and mobile, an area that I think you'll all agree is very innovative and lends itself remarkably well to online trading, or at very least to checking the trade that you already have on. The innovation in this area is incredibly interesting to watch because it moves remarkably quickly, and a lot of the business models that exist around this, I think, are still very early stage. And as I was just chatting with Hugh, I think it's a bit like AOL and Alta Vista at the early part of the internet. I think where we are is a very exciting future for both mobile and social services, or social, not social services, social trading. On that note, I'm going to go back to the gambling and introduce Adil, who's another editor at Forex Magnates, to take over and ask a lot of interesting and difficult questions.
Testing. Thank you, John. Good afternoon, everybody. Welcome to the Social and Mobile Trading panel. I'm your host, Adil Siddiqui from Forex Magnates. So we're joined by some distinguished guests from the mobile, tech, and social arena. We'll start with the introductions. We'll start with Ryan, and then we'll take it from right to left. If you could just introduce yourself for a couple of minutes.
Yeah, I'm Ryan Maroney from CQG. CQG is a technology company that's been around since about 1980. Primarily always been focused in the derivatives markets, but more recently, into the FX space as well. But our core competencies have always been infrastructure, technology, and so, more recently into the mobile data delivery, trading technologies, through internet mobile delivery. I've been at CQG since 2003, most of the time focusing on market connectivity, APIs, and that kind of stuff.
Thank you, Hugh. If you could.
All right, good afternoon, everyone. My name is Hugh Liang. I head up State Street Bank and Trust global exchange business in Asia Pacific. You might be wondering why a guy from an institutional bank will be sitting here amongst the titans of the social and mobile trading space. Actually, I represent the Curnex business, which is now owned by State Street. I've been with Curnex for pretty much since its beginning. And it's a common notion that people think that Curnex is actually an institutional platform. We actually took the institutional platform around 2006 and 2007 and took that same technology and turned it into a white label platform that is very usable for the retail aggregator market. And that's why we're here in a conference like this. We also provide mobile trading products, and we provide social type systems through partnering with a lot of the folks that you're probably very familiar with. So while we do not provide all of this platform on our own, we do have experience in working with a lot of broker-dealers through other partners. So hope you find some of the information we talk about today useful.
Good afternoon, or noon. My name is Leo Nabat. I'm the CEO of Trendmissy, also co-founder. I founded, together with my colleagues, Trendmissy about 2004, and actually I think we started what you call today the social trading arena. We are well known in our industry. We are a technology company providing our services to many brokers around the world, and we'll be very happy to discuss also the future of social mobile trading. Thank you.
Hi, good morning to everybody. My name is Leon Yochai. I'm the founder of ZuluTrade. ZuluTrade was founded right after Tradincy, and today we're connected with over 65 brokers globally. Over 100,000 algorithms are connected with our platform, and over 500,000 people are following all those algorithms on ZuluTrade.com. And I'll be happy to answer any questions today. Thank you.
Good afternoon. My name is Yosef Kaplan. I'm here today representing Leverate Trading Technologies. We are an innovator in global FX and CFD technologies. The platform that we have, that we offer to our clients globally, is referred to as Cyrix, Cyrix Web, Mobile, and Tablet, which also includes a fully functional Cyrix social platform. Our primary objective at Leverate is to continuously innovate and understand the needs of our clients as they grow into new markets and innovate new products, and put the power of our people and our innovation behind our customers' needs. We are primarily focused, and this is why we're here today with our representatives from our Hong Kong office, to listen to you, the FX brokers, to understand your needs and what you see as the future, and be able to adapt cutting-edge technology to allow you to achieve your goals. Thank you.
Hello. My name is Rajesh Yohanan. I head up Oanda for Asia. As some of you may know, Oanda is one of the world's largest FX and CFD brokers and has a history of technology innovation and cutting-edge technology solutions. Asia constitutes a fairly significant portion of Oanda's volumes as well as revenues. We have a significant presence in Singapore, offices in Tokyo, Sydney, and growing aggressively in Greater China and Southeast Asia. It would also be of interest to you that we acquired a social trading company called Currency in later part of last year, and that is, we think, a huge lever for our growth in the future. Prior to Oanda, I spent most of my working life at Citibank, and my last job was to run their digital channels across Asia. Thank you.
Perfect. Thank you, everybody. We'll get straight into what we've got planned for you. Range of questions, discussion points from the from the panelists, and questions from yourself, the audience. So feel free to raise your hand. We've got some mics at any time, and put your questions forward. So we'll start off with giving everybody an overview of what's happening, the latest things in social trading in Asia, kind of like what's hot and what's not. Leon, would you like to start off, or Leon from the social side?
Okay.
We think that Asia is really leading market of what we call social trading, system trading. I think you can see, and what we see also from mostly from Japan and other countries in Asia, a huge demand of the service. As we see today, almost hundreds of thousands of users are using such kind of services. And I would like to state that one of the reasons that it's very successful is because of the business model. Currently, in most of the cases in manual trading, people use a broker offering, and there's a lot of crowded area, mainly because of spread war and all of this. In the social side, the business model for the broker is very well known, and they can take normal spread and actually be more profitable. In our side, we can see that we see that brokers that using our technology are doing 4 to 6 times more profit than manual trading. This is why it's very lucrative for them. And also, we believe that our way of social trading, we call it more secure social trading, more controlled social trading, is the way that actually fit this market.
On our side, we think Asia is, Asia growth is great because all the most successful algorithms on Zulu Trade are run by Asians. Like the top traders on Zulu are Asians with great results, with very good statistics. People love that. The growth definitely is coming from there. It attracts lots of Asians because Asians would love to follow Asian algorithms as well, and Asian currencies, etc. So we're focusing here. As you know, Japan has about 65% of the total retail volume globally. So Japan, I think, is leading Asia for now.
For sure.
And so we got.
What are we seeing in China, maybe, for example?
China with all these kinds of regulations and issues with the wires and with, you cannot run a broker in China, etc. We haven't seen lots of things from China. Let's start from the base base account size, which is $500 per account, which is very low. And we really haven't seen the huge growth from China. Japan is still leading and will lead the...
Yeah. Must say, very important thing is that currently Japan is the only country that actually regulated some kind of system trading, social trading. Means that now it's more approved by the operator, by the regulator, and this is very important part of the social trading, because now it's become common, regulated, and actually I can say that from what we see is that the current brokers in Japan actually know what to do with this kind of service and how to market it to their clients, and they are very quite successful there.
And Yusuf, yourself, how are you seeing Cyrix being deployed in Asia? Is there any good examples you can give us?
Sure. Someone mentioned earlier about business model. And I think that this is a key value differentiator when you look at the technology and you look at the ability for global FX brokers to adapt to the cultural needs within the Asian market. The Asian market and our traders in these countries require an in-depth understanding of their own due diligence. Everything, as I think was mentioned earlier, all trading environments are not the same. Understanding the business model and how it drives with regards to recommendations, investment managers, or a truly open social community. The ability to empower Asian traders to do their level of due diligence in a purely open Cyrix social community has seen tremendous traction within the adaptation of social to allow new users to get comfortable before they initiate a copy or a watch. Providing that level of transparency and comfort to new novice traders in the Asian market has seen tremendous traction and success within the Cyrix model.
Chaps on the right, I'm going to come to you shortly. Rajesh, 2 points for you. We mentioned Asian traders, half the world's population, several countries in one category. Is that what you're seeing? So are they the same in India, China, Vietnam, Thailand, Indonesia from the social perspective? And then also just tell us a bit about currency for Asia, for what you're looking after.
Can I just flip it around and talk first about currency and then just bring it back?
Sure.
I think the way we looked at currency is because of two issues that we struggled with. And you talked about novice traders. I mean, we have to be honest with ourselves. Bulk of our business models across all brokers is that we get in a lot of customers who come in, who get burned, and they disappear. And we just are in a constant struggle to keep bringing in these new customers who burn and get out. And we thought that employing a technology in a platform like currency would actually help arrest that trend to some extent. The second thing that we've been noticing, of course, is, and this is a little bit because of my banking background, is a balance between investments and trading. And usually when you see most of the people who come into our platform, they are traders. They are looking for short-term gains, and they are looking to make those short-term gains and move on. And we think that there is a value in kind of broadening it, not taking a very strong stance, but broadening it and trying to bring in investors with a little bit of a long-term outlook, and we think currency can definitely help on that front. And that's the genesis behind which, or that kind of drove Oanda to make the acquisition of currency. As far as Asian, I don't think so it's a particularly Asian trend. And social trading, if you have to buy a phone or if you have to buy a car, you value the opinion of people that you think are experts. And we do that on a daily basis. So social media in general tends to be just a magnification of what is a very, very human thing to do. I mean, if I have to go to college or I have to buy a car or even a mobile phone, I would go and ask an opinion. And even if I don't ask opinion, subconsciously, I'm driven by some other influence. So I think that is what is driving that. And I don't think so it's a very Asian phenomena. And you will see that cutting across all geographies. It's another matter that because of the geographical size of Asia, you're seeing a large number of traders coming in from Asia. But I think the trend is going to be rather global.
I see. Leo, you mentioned profitability ratio has increased by 4 to 6 times. Hugh, what's the liquidity impact on that? So when you've got an influx of orders coming in, and then the other point I want anybody to talk about is a lot of your brokers have 2 operational models, as a broker and a dealer. How does that impact them when they've got 4 to 6 times more people who are making money? And enough said on that then.
Right. We've been talking here the whole time about social. I just want to put one word into the mobile, because this is a mobile and the social panel. I think they're actually two different stories to talk about, right? Mobile is more technology driven. The whole world is changing. We're going into mobile, therefore we have mobile trading. Social is more phenomenal, right? It's a shift in our lifestyle that people are getting into social. So they're happening, they're both happening and both increasing in speed, but they're happening for different reasons. In terms of liquidity, I think this is pretty good for me to answer this, given that we're sort of sitting from a back-end perspective, working with a lot of the bank, being the enablers for this type of trading services. That is probably the single biggest thing that's gonna either make this thing continue to increase or actually shut it down. And that's, how is the bank going to take care of all this stuff? And if you look at the broker-dealer space in terms of risk management and the regulatory pressure that's coming in, Leo has mentioned that the Japan side is starting to regulate this, and I can absolutely see more places going to start regulating this. How do you prove to the regulators that as a broker, that you're able to actually take in these trades, which are very much directional, which are not high frequency, so they're probably not going to be closed within a matter of seconds or minutes. They're probably not going to be closed until days or weeks away. How do you actually manage that liquidity? Right, if people are trading in 10, 20K lots, and you got 5, 6, 7,000, and sometimes even tens of thousands of this, you end up you're talking about 50, 100 million, or even more in terms of a block size that's potentially going out to the banks. So you can either hold this yourself as a broker, which is probably way too much risk you want to take, or you want to give this out to the banks. Now the banks, in terms of electronic trading, when you get up to 50 to 100 million bucks, it gets pretty difficult for the electronic trading side to just to hold this. And while they can realize that this is coming from the social space, the directionality of that it's going to cause them to think twice about actually accepting this kind of stuff. So I think that the important thing is that whether it's the broker or the technology provider, there has to be something in place to really handle the risk management side of this. As we continue to increase, whether it's 30,000 people or the other gentleman here talking about 500,000 people on his network already, this is probably the single biggest problem that we have. And much of this is actually educating and working with the bank side. I think last year we had some conversation about liquidity panels, talking about is more liquidity actually better? I think this actually goes back to more about smart liquidity. How do you make sure the industry knows that this phenomenon is actually coming? And how do you make the liquidity providers comfortable in actually taking this kind of stuff? And I think a lot of this really goes into the
Hugh, sorry to interrupt. How important is social trading for Coronex now?
Because we got into this space in around 2006, 2007 timeframe, and we got into mobile trading around 2010, 2011, we want to be able to cater to all the different clients out there, right? And I think one of the things that quite a few of our customers really like the system that we have in the back end is because it's an institutional system. We have the ability to risk manage, whether it's warehousing, whether it's A-book, whether it's taking the block and breaking it up to multiple sizes, and working with the different banks that actually provide this. So I think for us, we want to be the provider. We want to work with as many people as possible. We certainly think that this phenomenon will continue to grow, and mobile is something that's actually going to accelerate this kind of phenomenon. So we're absolutely in it.
I want to bring Rajesh back in this. As a broker-dealer, you can specify which one you are. 4 to 6 times profitability, how are you going to handle that?
First of all, the problem is, we tend to, with these kind of trends, we tend to magnify the impact of that. And I mean, social media is big. That's why we think there is a future for it. But as things stand today, it still constitutes a very, 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 very small sliver of the overall FX volume. So it's not reached a stage where we are wondering as to, oh goodness, what am I going to do?
If we agree with Leo and everyone's making money, then everybody will shift.
And the making money is not the user making money, it's the broker making money.
Okay.
Okay.
Horrendous mistake there by me.
No, the user, this is for, I got for sure that if you don't know, in social trading, in if you want, I can show you making money more than manual trading. This is it's not assumption. It's a fact. Let's start with this. Okay? For me, this is of course in social trading, end user making more money than normal trading. But if the brokers makes money, because please understand, it's very, very difficult to do B-book in social trading. Very difficult. So you need to go A-book. If you don't do A-book, you need to find how to make money. And there is not enough liquidity. Not enough. Means that if someone can give me and spare me a couple liquidity, I will be very happy. Call me, please, because we need a lot.
I want to put a word to this. Before we get to an euphoria and start unanimously saying that social trading is going to make everybody more money,
No.
let's realize that we have very few years of experience so far. And what I think a lot of the non-institutional traders, when we're looking at the institutional space, people are managing tens of billions of dollars. There's all kinds of tools for them to do simulation, back tests, stress tests. Governments are forcing people to do this. On an individual level, what tools do we have to actually look at the history of this? Well, we got a couple of years history perhaps for one of these signals, and we have some sort of social ranking score that's provided by each of the providers, right? I think it's a little too early to say. It certainly democratizes investing in some ways, and I think people are looking for different channels to help them. A couple of the panelists said, the guys in Asia wants to follow a guy in Asia. I think that's actually probably not true. If I'm here in Asia, I want a social platform that gives me access to people outside of Asia, right? The power
You want
of
to
this
follow
platform.
someone who's making money. It don't matter where they're from, right?
Exactly. Wherever they're making money. But the thing is, let's put some caution to this. Rather than blowing this phenomenon and this environment out in 2 years, and we're not going to be talking about this again, I think we got to do the education on the regulatory side, on the liquidity side, on the bank side, and on the technology side so that we can actually sustain this going forward.
I think something is very important to a couple of points that have been raised here. What we've seen across the globe in looking at many, many different FX brokers, large, small, mid-size, Europe, Asia, Russia, Africa, South America, Australia, is that we see what I would call slow and steady trend upward. Now, when we look at it, we take peel the onion back a little and take a little bit of a deeper dive. We're looking at cross instruments, so it's not just, let's say, FX or the majors, but also commodities and CFDs across the board. It's not dedicated to one country or one region. As was mentioned earlier, we are seeing the traders looking to have cross-regional, cross-asset exposure. It's all about empowering your end users, okay? Using social, it's not a function of you're going to force it down their throat. You're offering this innovation and you're offering this technology to your end users in order to engage them, to allow them to use your brokerage, to use your liquidity, to create more volume and more profit for your business. It is not the end-all, be-all of everything, and no one's saying that. What we're saying is that we're seeing a consistent growth in the numbers, and we see new traders that start trading social actually progress once they get comfortable with trading FX, commodities, and CFDs to then venture out on their own. And that's where you start seeing a split between dedicated social to actually ongoing manual trades. It will enable you as the FX broker to open up new markets for new customers, new users that you never saw before in a friendlier, non-threatening environment where they can actually begin to watch a trader and then copy them, see results, get comfortable, and then move on to be their own FX trader. So I think that the key takeaway for social is understanding that you want to use it as a tool to help your traders, to help grow your user base for the future.
Thank you. Ryan, welcome to the panel after 18 minutes. Okay, what about listed instruments? Is there going to be any chance that you're going to have futures, equities coming onto social? What's your thoughts on that?
Yeah, we've actually already seen some people that are doing futures with social. It's a little bit different because there's different regulatory bodies and so it's different challenges. But certainly I think within the futures space there's a big demand for social for the exact same reason, which is one of the biggest barriers to entry into trading is lack of knowledge of the markets. So the opportunity to get in, use it as a tool to learn the markets, follow somebody, understand why they made the trades they made, and then from there gain confidence in your ability to place your own trades. So it is for a sustained growth, and I think, you know, within the futures derivatives world, I don't think it's more complex than FX is, and so the barrier to entry, the lack of expertise is even bigger in the futures world. So I think there's a huge space for social within the derivatives market.
And I think that the problem there in liquidity is much bigger than FX. So the barrier will be there, I think.
I think the liquidity is the first underlying aspect that has to be solved. Futures, I personally haven't seen the futures automated trading or social aspects of it. Equities has been there since 07, 08. I don't know if the FX really followed the equity space. In the US, there's been quite a few in the late 80s that already did the equity trading. And that's a heavily regulated environment, given that it's equities. And there's a bit more transparency in that than FX, given that all the signal provider themselves has to be registered, as opposed to the way Japan does it is a system provider or the broker has to be registered. So I think that comes back to the regulation again. I mean, for this thing to continue, I think the transparency has to increase. Just everything is already moving in that direction in the institutional space. On the retail space, every government is going to be trying to protect the retail users. So unless you really have knowledge of where these signals are really coming from, I think sustainability is going to be a little bit difficult.
Leon and Rajesh, so what's the kind of regulatory perspective on the social trading? Are firms going to have to go for the asset management license? And Awanda, who's known to be on the safe side a lot, how come you entered? I mean, do you have an asset manager discretionary license that you've entered currency?
We are launching that progressively. So we are in discussions with the Asian regulators, and we will, in all probability, have to go in for a slightly extended form of our license to be able to offer currency in Asia. But it's a very, very new thing. I mean, you know, as collectively as an industry, we need to be able to talk with one single voice with the regulators. Yep, the